What if companies were actually the ones choosing if inflation happens in the economy? Just got the release of PMIs, which are the Purchasing Managers Index. We take a couple of things: employment, the demand, and also the input and the output prices. Let's drop right into it. The Euro PMI that we had today. And so it basically says that with the US-Iran conflict going on, what we're currently having is companies front-loading orders. Is that it's because they expect a widespread of supply shortages and rising expenses. In that case, demand is eroded. That there's more demand in the economy, but actually it's not the case. Companies expect inflation, that's why they're front-loading. A surging in input price inflation is the ultimate worry of the different companies. It is likely to trickle down on the consumer. Now the question is, how does it trickle down on the consumer? Another article for the Great Britain PMI that talks about this a little bit more in depth. Great Britain PMI, similar thing, they're front-loading orders as well, but it gives a better explanation of what's actually happening. So it's basically saying when companies see that they have rising operating costs, they need to keep certain margins in the company in order to be profitable. In that case, it's going to be either they cut jobs, means they pay less people and they keep more money for the company, and also they increase the output prices because input prices are higher, so they need to increase output prices. They're deciding if they want to transfer or not the cost they are bearing to the consumer. Inflation arrives, it passes through the business, and then the final person that bears it is the consumer. You're going to feed into core inflation because core inflation excludes energy prices and food inflation, but it does not exclude transportation and housing. The electricity companies, gas companies, transportation companies, for example, when you take the plane, you're going to bear a higher cost when you buy your plane tickets due to high inflation that the company has that is transferred to the consumer. That graph was really interesting to mention also as well. It shows the two sectors, services and manufacturing, input prices and output prices. So we can see that in blue and red, we have input prices that are starting to rise. Companies start to see that they have to do something about higher prices. So far, output prices are a little bit lower, the green line and the yellow line. This shows that so far, the cost is not fully transferred into the economy. That's why we're not seeing a huge inflation in Great Britain or in France or in the United States yet. So higher inflation means central banks have to hike rates and it has a negative impact on the stock market. So if you want to know why I'm not investing in indexes or reducing my exposure, go check out my last video on my YouTube channel. That was Sandro and that was how to think and train like a finance pro.